Asia-Pacific stock markets experienced a notable rise on Monday, driven by encouraging news from China. The positive market reaction was widespread, with key indices across the region all showing gains. China's manufacturing activity surged in May, with the PMI hitting 51.7 in May, marking its highest level in nearly 2 years. Investors remained bullish on Asia-Pacific stock markets, with key indices across Hong Kong, Japan, Australia and South Korea all showing gains. Meanwhile, Wall Street futures remained steady, indicating cautious optimism ahead of the first trading day in June. Oil prices, meanwhile, fell on Monday despite a move by the Organization of Petroleum Exporting Countries and its allies, collectively known as OPEC-PLUS, to extend crude output cuts into 2025. The cartel is currently cutting output by 5.86 million barrels per day, which is about 5.7% of global demand. That includes 3.6 million barrels per day of voluntary cuts that were set to expire at the end of 2024, extended by another year, while the group also stretched another round of cuts totaling 2.2 million barrels per day by 3 months until the end of the third quarter of this year. 8 countries have indicated plans to gradually phase out the 2.2 million barrels per day of additional cuts over a year, from October 2024 to September 2025. Oil prices have been pressured by fears that the US Federal Reserve will prolong high interest rates, potentially slowing economic growth and reducing oil demand. Let's get more on this now with Russ Mould. He's the Investment Director at AJ Bell. Thanks for being with us, Russ. Now, it looks like investors are optimistic for June.
Generally speaking, it's been a very, very good year for risk assets. Anything that's been to do with technology or biotechnology have been particularly popular, but markets still seem confident despite the weakness in the oil price that you discussed. Share or equity markets seem confident. The economy is strong enough to support corporate profits, but not too weak as to jeopardize them, but not too hot so as to force interest rates to stay too much higher for too much longer.
Right, and China's manufacturing PMI grew at the fastest pace in 2 years. Is China finally making a recovery?
There's a lot of work still to be done. I know there's a lot of speculation that some people think the Chinese may devalue their currency. Some think that it may even revalue sharply as perhaps others shun as other countries shun the American dollar. But at least the number is staying above 50, the guideline between growth and slowdown. So in that respect, it is encouraging. But there is much work to be done, particularly with regard to that property real estate bust. And we see over the weekend that China is trying to encourage growth with a car trading scheme, very similar to the cash for clunkers program we saw in America after the great financial crisis nearly 20 years ago.
Okay, let's move on to oil now. Oil prices have slipped despite OPEC extending those output cuts. What's your outlook for the second half of this year?
Gosh, my record on oil is absolutely appalling. I'm a terrible forecaster of the oil price. I mean, clearly, on one side, to support the oil price, you have ongoing geopolitical situations in Ukraine and the Middle East. You have the OPEC supply cuts, and you have oil majors who are not as active in their drilling work because they're being told not to by the public and politicians for environmental reasons. On the negative side, you have this concern that, yes, maybe America will keep rates high for longer, that could work on economic activity. But again, that's a very different message than one we're getting from, say, the share markets, which think the economy will remain pretty healthy.
Right, and investors seem to be shifting focus on India now this week ahead of election results. What can we expect?
Well, I noticed over the weekend that the BSE 100 index, India's leading stock market index in Mumbai, was reaching a new all-time high, amid expectations that Mr. Modi would win another landslide victory, and also the Indian government borrowing costs were coming down, again in expectation of a clear majority for the existing government. I guess markets have been very encouraged by what they've seen from Mr. Modi economically in terms of his programs over the last 2 terms, and they're clearly looking forward to further strong economic growth and investment going forwards.
Right, Russ Mould there in London. Thank you, as always. Now a quick look at some of the top business stories from around the world. Australia has raised its minimum wage by 3.75% in line with inflation. The minimum rate will rise to $16.15 an hour starting July 1st. This will guarantee an extra $21 a week for almost a fifth of the Australian workforce. The rise comes as the cost of living pressures leave many low-income families struggling to make ends meet. Turkey's Pegasus Airlines plans to increase its fleet to maintain its rapid growth post-pandemic. Having already ordered 36 Airbus A321neo planes last July, the total order since 2012 now stands at 150. Meanwhile, S&P Global Ratings recently reaffirmed Pegasus Airlines' credit rating at B+, signaling the company's strong financial stability. Online fashion retailer Shein is to list on the London Stock Exchange at a record value of $63.7 billion. The company shifted to London after facing regulatory hurdles in New York. British lawmakers are questioning this move and calling for more scrutiny. In response, Shein says it's improving its governance and compliance. And Advanced Micro Devices has announced its new artificial intelligence chips for everything from data centers to advanced laptops as it looks to challenge industry leader Nvidia. The move comes at a time of booming demand for specialized processors that help train AI applications such as ChatGPT. Nvidia currently dominates more than 2/3 of the lucrative market for AI semiconductors.